Hi everyone! In this video, we will summarize the standard IAS 10 events after the reporting period, because now this relatively old standard comes to light due to pandemics. Welcome! I am Sylvia, the founder of IFRS Box, the place to be if you want to learn and understand IFRS easily. I have created the IFRS Kit, my premium course full of videos, Excel files, examples, and other useful materials. So check that out at ifrsbox.com if you need to. Let's focus on IAS 10 now. The very first version of IAS 10 was issued as early as in 1978 under the different name, but then the standard was revised a few times, and its most recent major revision took place in 2003 with the effective date of 1st January 2005. And there were some improvements and amendments later on as well. IAS 10 has two main objectives. Number one, to prescribe when an entity should adjust its financial statements for the effects of the events that happened after the reporting period. So you do not account for all events, and we'll explain that later. And number two, what disclosures an entity should give in relation to these events in its financial statements. Also, bear in mind that if the events after the reporting period indicate that going concern assumption is not appropriate, then an entity should not prepare its financial statements on a going concern basis. Just as an example, imagine that the pandemic broke out after the reporting period, but it may cause that you will have to shut your business down, so your company is not a going concern. So what are the events after the reporting period? Those are all events, both favorable and unfavorable, occurring between the end of the reporting period and the date when the financial statements are authorized for the issue. So first of all, you need to determine when the event happened in order to say if IAS 10 applies or not. Let's see here on the timeline. We have the end of the reporting period on 31st December 2001. And then the accountants work hard, do their closing works, and the financial statements are completed on 31st January 2002. Then they are submitted to the board of directors, and the board approves them on 15 February 2002. In other words, authorizes them for an issue. And then the financial statements are submitted to the shareholders for approval, and they approve them on 28 February 2002. So here, you need to assess events happening between the end of the reporting period and the date when board of directors approves them, because this is the date when the financial statements are authorized for an issue. You do not take later events into account. Sure, this process of approval might involve other steps like submission to non-executive supervisory board as well. But again, that doesn't matter because the financial statements are authorized by the board. Therefore, if there is a sudden earthquake on 16 February 2002, IAS 10 would not apply here because this event did not happen within the defined time frame. So here, we saw when the events after the reporting period happen. Now let's take a look at two types of the events after the reporting period. The first one is adjusting, and as the title says, you will make some entries as a result of those events. So adjusting events are those events that provide evidence of the conditions that existed at the end of the reporting period. In other words, these events might have happened after the end of the reporting period, but they were a result or a consequence of something already in existence. So if you identify this event, what shall you do? Well, this is an adjusting event, so you need to adjust the amounts recognized in the financial statements to reflect these events. Let me give you a few examples. Well, let's say that in January 2002, there is a settlement of a court case, and you're liable to pay some penalty or whatever. And this settlement confirms that you had an obligation existing at the year end, and you should have made a provision in line with IAS 37. Another example. Imagine your client goes bankrupt after the end of the reporting period. And this strongly indicates that the client was credit impaired at the end of the reporting period. And you should have reflected this fact in the expected credit loss calculation. If you have not done that, then you should adjust the financial statements. Then discovery of fraud or errors. And this is a typical event showing that the financial statements are not correct and you should adjust. The second type of the events after the reporting period is non-adjusting event. And this is the event which indicates the conditions that arose after the reporting period, or they did not exist at the end of the reporting period. In this case, you do not adjust the financial statements, so no booking. But if the events are material, then you need to make a disclosure in the financial statements about the nature of that event and an estimate of its financial effect, well, if you can make it. The examples of non-adjusting events are decline in fair value of investments, especially if the fair value declines due to overall decline in the markets, and that's usually a condition that arose after the end of the reporting period. Natural disaster is another example. And let's say that the earthquake destroyed your building or other assets after the year end. Well, again, this occurred as a result of event after the year end. Dividends declared after the year end are a special example of non-adjusting event because no obligation to pay dividends exists at the year end. Well, unless we are talking about dividends on preference shares that are in fact a liability, not equity. How about the pandemics? Okay, my take on this is that although the first signs of pandemic might have occurred before the year end, the businesses suffer more from the measures and spread that happened afterwards. So it is widely accepted that the current pandemics is a non-adjusting event. Well, if you live in early affected countries like China, you might need to take a closer look to that. So this was the introduction to the events after the reporting period as arranged by IAS 10. And if you need to learn more about this topic plus see some examples also on other IFRS topics, you're very welcome to check ifrsbox.com, subscribe to my free newsletter, and learn to apply IFRS in practice. Thanks for watching. Bye.